Today, we'll be continuing our mini-series, Can I Get a Bad Credit Mortgage with this lender? Well, in today's video, we'll be talking about a mortgage lender called Pepper Money and whether they can accept your bad credit. Before we get into it, let's quickly summarise who Pepper Money actually are. So, for a bit of fun, like I did last time, let's type it into ChatGPT to see what they have to say. Pepper Money is an award-winning specialist mortgage lender operating in the UK. They offer a range of first and second charge mortgages to customers who are often overlooked by high street lenders. They focus on providing flexible mortgage solutions to customers who may have been turned down by traditional high street lenders due to their complex financial situations, such as self-employed individuals, those with poor credit history, or people who have unique lending needs. Once again, I would say that is right on the money, if you pardon the pun, because we know that Pepper Money, from personal experience, we do work with them very closely, and we know that they will accept people with bad credit. So, now that you know a little bit more about who Pepper Money actually are, let's go ahead and take a look at some of the bad credit they can accept, as well as some of their advertised interest rates. And like always, please remember that the information that you're seeing contained in today's video is only accurate at the time of making. A good place to start, I thought, would be with some information that I pulled from Pepper Money's website that will give you a brief summary of some of the things that they can help with. So let's take a look at some of the key types of bad credit that Pepper Money claim to be able to help with. You can see here they can help with defaults, county court judgments, debt management plans, and they're also saying here that they don't actually credit score. So let's take a little bit of a closer look at those altogether. If we have a little look here at the default section, you can see here that they say they can accept defaults as recently as 6 months ago. So that's quite interesting. And they're also saying that they don't need to be satisfied. So what that's saying is if you have a default and it's never been paid back, they're actually okay with that. Let's have a look at what it says under the county court judgments here. Doesn't need to be satisfied. Again, if it's never been paid back, Pepper Money can get comfortable with that under the right circumstances, of course. And it's also saying that there's no value limit. So no matter how big the county court judgment is, whether it's for £30 or £30,000, what they're actually saying here is they don't have any hard policy to say that's too much. And they're also saying county court judgment as well can be registered as recently as 6 months ago too. Let's go ahead and take a look at the debt management claims that they're making here. You'll see here it says available on Pepper 24, 18 and 12. You might be thinking, what's that? We're going to cover that shortly, don't worry. But one thing it's saying here is if you do have a debt management plan, it must have been active for a minimum of 12 months. So what they're saying there, if it has been active for over 12 months, that's potentially something that they can look at too. You'll also see here as well that Pepper Money make a lot of claims that they do have a strong approach to affordability. So you can see here, you know, if we have a look at that sentence specifically, they say they can use 100% of monthly shift allowance, bonus, commission and overtime. That can be really useful if you're just trying to be able to borrow a little bit more money. And they also pride themselves upon allowing people who are self-employed to apply, even if they've been trading for just 1 year, which is quite rare. There are other lenders that do it, don't get me wrong, but most will want at least 2. And they'll also accept people who are on day rate contractors as well. So what all of this is saying is if you do have a more complex type of income, then they're not going to disregard you immediately, and they're prepared to take a little bit more of a flexible approach on things. So now that you've seen a quick overview of some of the things that Pepper Money can accept, let's take a quick look at some of the products that they can offer. And you will see the type of product that you qualify for will dictate that the rate you're offered as well as the deposit that you're going to need. As you can see here, Pepper Money have a number of products that they have available. So we're going to start at the top and just talk through what they're getting at. So the first one you're going to see here is Pepper 48 Lite. What they say here is this is a product suitable for customers that haven't had a default in the last 48 months and who have never had a CCJ. That's Pepper 48 Lite. Now, if we have a look at Pepper 48, they're saying suitable for customers that haven't had a CCJ or default within the last 48 months. So when we look at the difference between those two that we've just mentioned, the 48 Lite says no CCJ ever, whereas the Pepper 48 says no CCJ within the last 48 months, hence Pepper 48. Moving on to Pepper 36 Lite, you'll see it follows a similar kind of theory. Suitable for customers that haven't had a default in the last 36 months and who have never had a CCJ. Pepper 36, suitable for customers that haven't had a CCJ or default in the last 36 months. Now, if you have a read down the list, it all follows a very similar pattern and trend. So let's go ahead and just jump right to the bottom. Let's go with Pepper 6 Lite. You can probably guess how this will work. Suitable for customers that haven't had a default in the last 6 months and who have never had a CCJ. Pepper 6, suitable for customers that haven't had a CCJ or default in the last 6 months. So, if we have a look at the bottom and the product that we've just discussed here, Pepper 6, what they are saying is if you haven't had a default or a CCJ in 6 months, as long as it's been outside of that period, you can potentially qualify for that product. Now, you can probably guess that something like a Pepper 6 will require a higher deposit and a higher interest rate than a Pepper 48. And that is simply because it will be deemed as a more higher risk mortgage for Pepper Money. And whilst I'm not going to sit here and talk you through every single mortgage product that Pepper Money offers, what I will do is show you a snapshot example of how a Pepper 48 Lite product would compare with a Pepper 6 product. So you can see here a little bit of a snapshot view of what the Pepper 48 Lite residential range looks like. So this is anyone who is living in the property and wants a mortgage for that. So if we have a look, there are various different options shown on here: 5-year rates, 3-year rates, and 2-year rates. And you can actually see that within this range of products, you can put down a deposit of 15%. That's the absolute minimum deposit they will let you put down. So you can see here on a 5-year, if we just kind of have a look at the initial rate column, the lowest rate available on there with a 15% deposit, you can actually see is 6.34%. And that varies with a 15% deposit on a 5-year rate between 6.34% up to 6.64%. And that will just change depending on the product fee that is attached to that specific product. Okay, so if we have a look here, we can see there is a rate of 6.34%, but that comes with a £1,495 product fee. You might be thinking, well, is it better to go with this rate with the higher product fee, or am I better to go with the higher interest rate of 6.64% and no product fee? The answer is you would need to get mortgage advice, and a mortgage advisor would be able to calculate which one is more appropriate for your needs. So as you can see, this is just a product guide talking you through their various costings, interest rates, fees that are applicable with the certain mortgages that they offer on the Pepper 48 Lite range. And just in the bottom right corner as well, you will see here that there's just a little bit of an overview of the criteria that is acceptable for this product type. Obviously, we've covered already, they don't accept CCJs, so you're not allowed any CCJs with this product range. Defaults, you're not allowed to have any within the last 48 months. In terms of the value of CCJs and defaults registered, there is no limit to that. Just remember, it would have to be outside the 4 years, but they're basically saying if it was outside that period, then as much value as you like. Secured missed payments, what are they referring to there? They're looking at things such as missed payments on a mortgage, or maybe a loan that's secured to a property. And they're saying you're not allowed any of those in the last 4 years, 48 months. Bankruptcies and IVAs, they're saying that must have been discharged over 6 years ago. Repossessions, none in the last 6 years. And debt management plans considered if satisfied, so completely paid off, over 12 months ago. So let's go ahead and take a look at the Pepper 6 range as well. Again, for residential mortgages, if you're living in the property and you have a mortgage on that property. So You'll actually see here, one of the first things that you might be drawn to is they don't have an 85% option. So with this range, you must put down a deposit of at least 20%. So for continuity, let's just have a look at their 5-year rate again. And you will actually see here, if you're putting down a 20% deposit on their 5-year rate, the rate you could be offered could be 7.2% up to 7.5%. And just the level of interest rate that you're going to have there will completely depend on which product that you pick and the product fee that is attached to it. So like you can see here, 20% deposit, loan to value 80%, a 7% interest rate will be offered, and with that there's a £1,495 product fee on as well. So if you just have a little look in the bottom corner of the screen, we're going to have a look at the criteria that you'll need to meet for the Pepper 6 range. So if we just start at the top, it says here, CCJs 0 registered in 6 months. The same with defaults, 0 registered in 6 months as well. What it's saying is if outside that period, then they can potentially look at that. There's no limit to the value, the accumulative value of the CCJs and defaults that have been registered. So whether it's £100 or £100,000, then there's no hard and fast rule on that. They're also saying secured missed payments. Remember, when it says secured, they're talking about mortgage payments or a loan secured on a property. They're saying that you're not allowed any in 12 months. Okay. And bankruptcies, IVAs, they must have been discharged over 6 years ago. And repossessions, you're not allowed any here, you can see, in the last 6 years. And then finally, debt management plans, they can be considered as long as they were satisfied, so paid off, over 12 months ago. So now that we've taken a look at how the Pepper 48 Lite would look versus a Pepper 6 product, one thing I just wanted to give you a quick summary on as well will be the specific mortgage range that Pepper Money have out for people who are on debt management plans or have been on debt management plans, and also the people who have either been bankrupt or had IVAs in the past as well. So if you have a look on the screen now, we're just going to briefly cover off what Pepper Money's debt management plan range looks like. And this whole range that we're going to talk through now, this is suitable for customers who either have a debt management plan or has been satisfied within the last 12 months. And if we just have a look at the top, there's something called Pepper 24 DMP. And what the 24 is referring to here is the CCJs or defaults that is accepted with it. So if we just read what it says suitable for customers that haven't had a CCJ or default within the last 24 months. But just remember, you could have a debt management plan that is live potentially or been paid off within the last 12 months. We have a Pepper 18 DMP, suitable for customers that haven't had a CCJ or default in the last 18 months. But again, debt management plan can be active or paid off in the last 12 months. And then we've got our Pepper 12 DMP, suitable for customers that haven't had a CCJ or default in the last 12 months, but they could have a active debt management plan, or it could have been paid off in the last 12 months. We're now going to have a very quick look at Pepper Money's bankruptcy and IVA product range. So you've got on the screen now Pepper 24 bankruptcy and IVA, and this says here it's suitable for customers that have had a satisfied bankruptcy or IVA that's been satisfied over 3 years ago. The 24 here is referring to no defaults or no county court judgments registered within the last 24 months. We then have a Pepper 12 bankruptcy or IVA product as well. And what it says, again, suitable for customers that have had a satisfied bankruptcy or IVA that was satisfied over 3 years ago. And the Pepper 12 here is simply referring to no defaults or county court judgments registered within the last 12 months. Now, I'm not going to talk you through every single product that is available on the debt management plan range because there is so many, but I will tell you that on a 5-year fixed product, there is an option available with a deposit of 15% that you might be quite surprised to hear, and the rates start at 7.24%. And the Pepper Money bankruptcy range, you will find that their 5-year products start at 7.24%, but you will need a deposit of at least 25%. So there you have it. Now that we've covered the different types of bad credit that Pepper Money will accept and the different types of products they have and the interest rates that you're likely to be offered, I will finish by saying, like all mortgage lenders, there will be different types of criteria that will need to be assessed. These will be things such as your nationality, your employment status, and your income and expenditure. So with that being said, let's quickly cover what we've learned on today's video. Do Pepper Money offer bad credit mortgages? Yes, absolutely. But whether you will be accepted will come down to personal circumstances, and it's going to be influenced heavily by the amount of deposit that you have and how long ago the bad credit that you do have occurred. Will they accept your bad credit? Well, hopefully after today's video, you do have an idea of that, but if you do need some further guidance, then feel free to get in touch and we can see if we can help you some more. So if you do have any questions or any ideas for future videos, then please put those in the comments. Alternatively, you can send us an email and you can find our email address in the description below. So thanks for watching. Please make sure that you hit the subscribe button and turn on the notifications for more tips on bad credit and all things bad credit mortgage related, and we will see you in the next video.